everyone. Thanks for joining us. So today we're going to talk a little bit about annuities.
Yes. I'm curious because I have some very nerdy portfolio answers like you'd expect, but I'm curious what comes to your mind when you think about or hear the word annuity as it relates to clients?
Run.
Yeah.
No, there are some situations where annuities can make sense. For me, in my opinion, they're very few and far between. A lot of times I think annuities can be used for people that don't actually need them. And we'll talk today, we'll get into deeper, about that and why they may not need them or why they may be better served doing something else. So, that's my initial reaction. I say that jokingly because there are a few situations out there that annuities can help with. But for the most part, the biggest issues I have with annuities are one, lack of transparency, two, some fees that go along with that lack of transparency, and lack of liquidity. So why don't you dig into a little bit of any of those that you want to?
Yeah.
Maybe start with the transparency bit.
Yeah, absolutely. It reminds me of about a year ago, we were looking for houses, and if you ever bought a house before, the real estate pictures on them, they're always like the best version of that house. And then you show up. I remember there was one where I was looking in the backyard and it looked like these like nice granite stones through a really nice yard. And I got there, it was actually a broken up driveway with grass. And it was like the way they did the picture was so impressive. And that's sort of how I feel about annuities is like, sometimes in theory, it's like, oh, this would be a great solution for that option. But like you said, so many times you dig into them and there's so little transparency. And what I mean by transparency is, it'll be a really complicated product. Like, hey, it tracks the S&P 500, but it's capped at this, and you only participate at this percentage. And there's a band between this and this where, we claw some of it back and it has to be over this rate. And they've got really, really smart people on the other end of that, making sure they set all those caps and conditions and stuff to where they're going to make a lot of money on the product, right? Whereas all the investments that we invest in on behalf of our clients here, we have tons of transparency and do exactly what they're holding, exactly what the expenses are that we're charging. And that helps us be more in control of our own destiny to make sure we're not getting a raw deal. And so, I think all of that feeds in is like the transparency and the fee conversation is almost one and the same because there's the explicit fees, which are also, pretty high. But then there's, unlike us who are fee only advisors that charge explicit fees that you're going to be able to see, we'll be able to tell you exactly how much you pay for investment advice. Mm-hmm. These products have fees behind them, which is not to say that makes them never useful, but it's just a lot more difficult when I can't figure out, hey, how much am I actually paying for this investment?
That's exactly right. The other one that I think about is having to pay a fee to get out of the product.
Yeah.
That's an always frustrating one to me. Let's talk a little bit, just briefly, about the caps. What does that mean? How do they do that? Give me just a little bit about that.
Yeah, so there's a whole fancy market of wild investment products out there called derivatives, where if you're a big fancy trader and you got a big book of business, you can go bet on. You can buy a product that specifically pays out if the S&P 500 goes up by a certain amount or down by a certain amount. There's puts, there's calls, there's all these complicated things called derivatives. And so basically what the insurance company does is they go out, they're selling the annuity, they go out in the market and they buy all the pieces to put this thing together. And then they bundle it and then they sell it to you as an annuity. And they will charge more than the constituent pieces. It'd be kind of like if, I brought you like a fruit basket and maybe it's like $2 worth of fruit, but I put it in a basket and now it's $30, right?
Right.
Because I put it in a basket. That's sort of what happens with all the caps.
Yep.
So for example, it would be like, hey, if you had an annuity that was S&P 500 with a 10% cap, well, if the S&P 500 earned 8% that year, you'd maybe get 8%. If it earned 18% that year, you'd get 10%.
Yep.
And the issue with that is stock market returns are really lumpy. Sometimes the S&P is up 27% in the year, sometimes it's down 14% in the year. And so putting that cap on is a lot more impactful than you think because you're still going to eat all of those losses, but you don't actually get to participate in the biggest gains.
Yep. So with that, the biggest way that I can think of to address that issue is to just separate out your investment from your insurance.
Yep.
I think a lot of times people get wrapped into annuities because they like one word, guarantee. in all seriousness, if you separate the two out, you have your investments, and then you address your risk with an insurance product. That's oftentimes the best way to do it. Not always. Again, there are some situations these things work. More than anything, though, with this lack of transparency and everything that we've talked about, something that I heard long ago is if you can't write out on the back of a napkin your plan, what you're going to do, it may be too complicated.
Yeah.
And I don't think you can do that with any annuity that I've ever seen. So I just think people sometimes get into products that they know nothing about.
Yeah.
They sound good, and then they hear that one word, I guarantee you some money, and that's the attraction. So
it's funny, some of the best investors I've met, even people who do private things in Oklahoma City and have been really successful, the common denominator I see across all of them is they have the confidence and the intelligence to be able to very confidently say, I don't understand that, so I'm not going to do it. And that's really powerful to, exactly like what you were saying, like if you can't put it on a napkin, you got to be empowered to be able to say, I don't understand it, so I'm not going to do it.
Yeah, absolutely. So there's a little bit on annuities. We appreciate y'all watching, and we look forward to future videos. If you have an idea, feel free to send it in. Thanks a lot.